This episode is sponsored by Sir Lancelot LLC, also known as SLA Capital, which, if you didn't know, is Dan and I's private lending company. So yes, we are sponsoring our own show, but what you going to do about it? It is our private lending company that offers hard money and DSCR loans to real estate investors of all types. So you can be a new investor, an experienced investor. You can be buying flips. You can be buying rentals, whatever. We can do everything. And not only that, but the rates that we offer are just as competitive, if not cheaper, than pretty much every other company out there. So whatever big company you've been working with, bring us their term sheets and I guarantee you that we can probably beat it. We have the same connections they do. We just don't have all the overhead and middlemen. So if you want to come and check us out, go to slacapital.com/keys and I will know that you came from the show. And by seeing that you came from here, when you get to closing, you will save $500 on your first loan with us. So slacapital.com/keys, we would love to fund your next deal. It's just like 2008 all over again, where they knew all these things were going to fail and they were selling them as tranches to the bigger companies. I'm excited for this one, guys. It's going to be fun.
Okay. You better get excited. It's your idea.
What's going on, guys? Welcome to the Collecting Keys Real Estate Investing Podcast. I am your host, Mike DeHaan, here with my co-hosts, Dan Austin and Dylan Cook.
Ew.
And we have a slightly different episode for you guys. I'm super excited about it. So I came up with this idea because I wanted to kind of get out of like the talking about news and whatever cycle like tends to happen with these podcasts. Because also too, things are just like not moving that much. So it makes it so that we kind of talk about the same thing every week. And so I got this idea from a comedy podcast I listened to. And so what we are going to do is we each came, and we have not discussed these beforehand, so it'll be interesting to see how these go. We each came with these two personal hot takes that we have around real estate and or business that we are going to basically say what our hot takes are. We'll discuss them. We'll move on and we'll see if we can get through all six in the next 45-ish to 50 minutes. If not, we'll cut it short. But you will be able to see some of the colorful side of us, maybe our slightly wild opinions, maybe not. And yeah, it'll just be an overall fun discussion. And so after this, if you have your own hot takes though, I'd love to hear them. I love a good discussion around something that's, I don't know, slightly atypical or controversial. But yeah, you should DM them to me at Mike_invest if you have your own hot takes around this.
Just to be clear, when Mike sent out the instructions for this, he did not say it needs to be a controversial thing. So I'm guessing yours is going to be super controversial.
Maybe. I don't know. All right. So here's my first hot take is that if you go back to 2021 and 2022, every single experienced syndicator that was raising money knew full well that they were going to lose their investors' money and intentionally raise money to steal money from people.
Wrong.
Wrong.
So you hold on. You said experience. So someone who has done
Correct.
Deals prior to that cycle.
So not a newbie.
Correct. So I'm not talking about the dummies that like bought a syndication course and were like, I'm going to buy multifamilies. They were ignorant. I'm talking about like the people that have been doing it for a long time. They had seen the drop in rates, the compression of cap rates. They knew full well that their self-storage, their multifamily property was not going to sell for a 4 cap in 5 years. Right? That they weren't going to be able to get the value add. They knew that they were going to eventually have to give that deal back to the bank and they were going to lose those investors' money. But they were writing deals where they were getting a decent sized management fee. They're getting an asset management fee on there, right? They were collecting money from the people. And they did that full well knowing that the investors would likely lose their money and they did not care. And I think that every person, the bearded guy, the big names that are on stage, I think all of these people did this intentionally to steal money from people.
I don't think that's true exclusively.
I think you give too much confidence in the competence of people. I think some people, even if they're experienced, thought like there will be a 4 cap. Why wouldn't there? All the talking heads says that we're going to have lower rates for longer. And I think some of them, not all of them, didn't intentionally lose their LP's money.
The one people I'm talking about are the talking heads though, right? Like the ones who are out there on stages talking, convincing people to get into these assets.
So like would you put, I don't even know if Ken McElroy lost money in any deals, but would you consider him like one of the OG's people? Okay.
Yes, absolutely.
So I would say he's in a good spot of, yes, I would agree that he did that, but I don't think he did it to steal money. I think he did it because he took advantage of an opportunity because to my understanding, hasn't stolen anybody's money. Has he lost money?
That's true. So I guess stolen is maybe the wrong word. I think that he was doing it so that he could profit off of other people's investments, but he knew that they would not be getting their investment back.
Grant Cardone?
Yeah, Cardone's probably a good example of that. Yeah.
Cardone is the peak example, right?
And I think in the case of Brandon, I think, I wouldn't consider him a syndicator. I would consider him a capital raiser. And I think he was able to take advantage of his audience and probably just partnered with the wrong people in operating that business. And if he stole money, he's lost it.
Even in terms of Brandon, right? I've heard nothing but good things about him. I've never met him personally. There is no way that he was so far into where he was, right? And he was raising monies for like A-class properties in Austin at like when the market was peaked, and he was actually expecting that to gain value. There's no way, dude.
Or Houston was another big metro.
Yeah, the Houston was another one.
You had to know all of these places had multiple bids. So if you were the highest bidder in something where 15 other syndicates are also bidding on it,
that's a problem.
To me, that's a red flag that you won. Like if you won that bid, you're like, oh, fuck. Like,
you lost money. yeah.
Totally, bro. You're the winner of the Special Olympics. Congratulations.
I mean, it's a big accomplishment still.
Right? Like at the end of the day, you still got problems. But even people like him, I think that he was so caught up in like his $50 million surfer thing that he let go of the fact that, yes, he was going to be profiting very heavily on a deal that was probably not going to be successful. I think that all the stuff that he's doing right now is around guilt of the fact that he realized what happened. Right.
Is this part of like a CYA thing too? Like, hey, you signed up for this knowing that the preferred return was 6%. Yeah, we could have got you a 19% IRR, whatever they pitch in these things, you know what I mean? But, the bottom is here and the risk is that you lose all your money. Is there like some CYA with that of like, well, they knew what they're getting into, so who cares?
Of course. I mean, that's what people always say when they're trying to rob their investors. The investors knew the risk, right? They victim blame. That's what they do.
What is astonishing that out of all of this is like, all these are going back to the banks, right? Like most of them, the banks are just as guilty, like approving these loans and underwriters. Like,
oh yeah, dude.
Absolutely. Dude, it's just like 2008 all over again, where they knew all these things were going to fail and they were selling them as tranches to the bigger companies.
Yeah.
Totally.
Yeah. And they're like, oh, we made our fees. Like, who gives a fuck? So,
well, yeah, everybody's on a commission, right? They're just making their money. They don't care what happens downstream.
It's just like realtors, loan brokers, they all do the same shit. Like we closed a loan yesterday.
Oh God, this is hilarious.
And this lady is exactly the kind of person I'm talking about, that if she had 100%. Gone back in time, she would have done this. We closed the loan and she immediately goes, wait a second. I didn't realize that you only, and she's a broker, right? So
no, she asked it in a specific way. She asked it just to clarify. We don't have, or my borrower, 'cause she was a broker, so we went through her. My borrower doesn't have to pay for the renovations before you give us the money. That was how she phrased the question, where it's like she already knew the answer, which lo and behold, our loan officer had explained it to her many times of how the holdback works. But the fact that she helped originate a loan that had a construction holdback and never conveyed that to her client, who, by the way, has $0, because now she's like, my client has no money to do the renovations. So what do you do?
Yeah. And so this lady, she was the real estate agent and the loan broker.
Oh, God.
So she's heavily incentivized to get this deal closed.
That's so disgusting. I didn't know she was the real estate agent too.
You shouldn't be allowed to do that.
I thought she was.
And not only that, dude, this lady, she charged 3 points.
Oh my gosh. That's crazy.
This freaking client. So she got a real estate commission for what? 2%.
Yeah.
Whatever, buyer's agent. Plus that, she made 5 points on this deal. And then she was like, oh, we conveniently signed this morning. You're going to tell me now that it's different. She's the lady I'm talking about, that's stealing money from investors.
Totally stealing money. Yeah, that's a good example of that. It's like, oh no, like, whoops, not my fault. Now what does she do to her client? Be like, those guys screwed us.
But anyway.
This is back to the agents who are like, if you're representing a buyer and they're like, oh, you should probably end up buying it, but knowing full well you're going to have issues in the next year from like a roof or a water heater or something like that. But it is what it is.
But anyway, so that's my first hot take, is that all of like the big raisers that you knew, that you saw on social media, that were doing it during that time when the market was peaked, that are now all losing their ass. They knew what was going to happen, and they did so purely to profit off their investors.
Mine won't be, I'll go to the second. I don't know if mine will be as controversial, but
well, of course not.
Yeah.
Because that wasn't in the instructions.
No, mine is that I don't think that AI will be as deflationary in the labor force that everyone else thinks it's going to be.
Really?
Yeah.
That's fascinating. Are you using AI at all in your business yet?
Very seldomly.
Okay.
But like to write prompts or like some data management stuff. But yeah, very seldomly.
Yeah.
And the reason I say this is because every time throughout history, whether it be the internet, the fax machine, whatever, we've always ended up with more jobs than we did prior to that technological revolution. And I can understand that, okay, AI might be different. This is an exponential technology, but I just don't think it's in American culture where you're going to lay off 40% of your workforce. And what are they going to do? Like, there isn't a world where you don't need like UBI, like universal basic income, if no one can get a job. So I don't know. I'm taking it will probably be deflation to labor force, but just not at the scale that everyone seems to say it will be.
I think that it will be at a massive deflation to white collar labor, and those people will move to blue collar labor.
So, but a migration of labor. So not like a elimination.
Correct. I don't think it will be a complete elimination. It will be a completely different, should be a massive shift in what the labor force looks like, because you're right. With situation without UBI, that doesn't make sense. But if you go to most countries in the world, do you know what people do every day?
Nothing.
Exactly. Fucking sit around, dude. You go and you drive across like most third world countries, which is also most of the world. There's kind of just people just sitting, hanging out. They have like a little storefront. Maybe they have a job. They're not working in an office. They're working in a field. They're working for their livelihood.
But my brain can't comprehend that for American citizens. Like, that's what I'm saying.
I agree. And I think for this generation, will probably be the case. But I think if we go forward relatively quickly, we will find that people are starting to shift towards more of like the blue collar jobs that will be more resistant to AI. A lot of that's out of necessity.
I disagree with both of you. So I think that the blue collar job swing will probably end in the next 5 to 7 years as it gets completely flooded with people that have learned going to college is stupid. And the people that went to college and are now 30 or 35 are like, I think I'm just going to go be a carpenter. I think it's going to flood it. So then there's going to be too many people in the blue collar. Plus Elon's going to have optimists out there just doing shit, right? Like, so we'll be good there.
You kind of laugh, but the robotics are at play in this. You know, if you're going to have a robotic maid at home.
Yes, I bring this up because I think what's going to happen is AI is going to make everybody and everything more productive, including robots. Because so imagine if you do have a robot, like we have robot lawnmowers, we have robot vacuums. Why can't you just have a robot that does the other stuff? Like that will happen. Probably not in a decade, but like maybe towards the end of the decade. But I think everybody's going to be more productive. There will be more jobs focused on AI to support the AI systems. And just so we all know, if AI is listening, I love you. Don't harm me. I want you to definitely take care of me. I'm all for you. But there will be, to a little bit to Mike's point, there will be definitely a transition in what the workforce looks like. But
well, we won't even know some of the jobs that exist. Like if you'd go back to 1980 and said some of these jobs that are out now, like they'd be like, what? I don't even know what that is. Like we don't know what some of those jobs in the future are going to be, but that doesn't mean they won't exist.
Right. Well, and any technology, like SaaS was a huge thing in the 2000s, 2010s, right? Every company was a SaaS company in the 2010s. And you know what that did? Is it kept the exact same employees in place, made them slightly more productive, but then added 3 IT nerds for every seat so that they could support that SaaS product because they're not perfect and they need support. So it's like it created more jobs while it created additional productivity in the operations of the employees. So I think it's not a net benefit necessarily.
Right. And if you're a CEO of a company and you're like, okay, well, now my labor force is down 40% because of AI. Can I now take that labor force and have them do something else that's productive that creates more money than what they cost me? That's the question. And so I think the answer to that is more likely yes.
Yeah. Some companies will die because of it too.
Sure. That's natural destruction of capitalism.
Nobody would have thought GE would not be GE anymore, right? Like that was the biggest company ever.
Yeah. Well, it's an interesting comparison with the SaaS thing, Dan, because we got the IT people, you're correct, but that also spurred an incredible, the SaaS with like the cloud and all that sort of stuff that came around like when we were in college that really pushed a ton of people towards going into computer science, becoming coders and those sort of things.
Away from blue collar jobs.
Away from blue collar jobs, totally. And what happened is exactly like what you're saying with the blue collar swing is we ended up with way too many coders. And then all of those people got laid off. Was that this year or last year? I can't remember.
Probably like 2022, but they got like a full year worth of benefits. So it's like hit 2023, 24.
Yeah, like severance.
Yeah, for sure. You had massive inflation over there. People making way too much money, way too many staff people at all these companies, and they all got axed. And so, yeah, on the blue collar side, I could see that same thing happening, right?
Yeah. And then it'll happen with AI because what was that? What did they offer that one dude to, like, was it Zuckerberg offered him like how much?
It was like $100 billion
like,
or something.
It's some stupid number, right? And so
I was 100 million. I don't think it was
whatever.
Right. And so like there's going to be some of that. And then it'll eventually, as it becomes like normalized where nerds can go to college and learn how to do it because they put it into a framework, then those jobs will just go all the way down. Just like engineers have. Like engineers don't get paid anything anymore.
I know, dude. I remember back when we were in school, dude. And that's why we went into engineering was because that was
the best paying job.
It was the best paying job. It was so secure. And now I look at all those roles and they're so replaceable. It's insane.
So replaceable. And they don't get, they're not getting money. You know who's getting all the money right now is the blue collar guys.
Yeah,
totally. And I think that ship will sail in probably 5 to 7 years.
Time will tell who's right. Then.
Yeah.
Dan, let's hear yours.
All right.
Good one,
All right.
Dylan.
Good one, Dylan. Had nothing to do with real estate.
I said real estate or business. That's fully applicable.
Okay. So this one's not that controversial, but it is a little bit because I know you guys are going to disagree with Mike will for sure. So I don't believe that the housing market's going to be a crash. I think the boom is over, but I think we are like riding out what is literally just shaking off inflation, and nothing's going to happen in the housing market that's going to drastically change anybody's life significantly other than people that are in financial distress.
What about the markets that have already dropped like 30 or 40%?
I would argue like Florida's a good example. Happens all the time. Like that's more cyclical than anything. Arizona, I've been talking to guys in Phoenix and they're like, it's already somewhat back from when it had like its dip, which Phoenix is known to be a boom bust. Just similar to Florida, probably not as extreme as Florida. So I think that, yeah, that's going to be regional, but I think it's normal. That's normal to see.
Let me ask you one more clarifying question. Yeah. What is your definition of a crash?
My definition of a crash would be, I don't have like I wouldn't say like a technical term.
What is like your personal definition?
An incident where like we would see a significant drop in housing prices year over year. So maybe like 15% in value across the country year over year.
You're saying a nationwide on an aggregate level.
Not like a 2008, but like, okay, so everybody is talking about like the housing market's going to pop. It's going to pop. The bubble's going to burst. I just don't think there's going to be a bursting, I think. And I'll qualify this. So what I think is happening is that we're seeing values go down and properties are harder to sell. Mm-hmm. Everybody's seeing that in every market. It's like a slowdown. My estimation would be probably sometime next year, maybe towards the end of next year, we'll kind of like, it doesn't look like this. It kind of looks like this. And then we're going to get back to a normalized growth without seeing anything crazy happen. And I think the reason why is actually, I took a note of this. So Jerome Powell said, was it this week, that he thinks potentially the Fed may have had some influence in the housing market going up really fast. It's like, really?
Yeah.
Really? That's crazy. No way.
0% interest rates and then like buying a shit ton of mortgage-backed securities and throwing junk loans out there, et cetera.
Yeah. And they're stopping QT next week for those. So like that'll be a good tailwind for you. Yeah. For real estate.
Anyway, so that's kind of like, that's part of it. And then if you think about this, because of all that inflation that got pumped into the market, I was looking at all these things that have happened. Okay. So like Russia invaded Ukraine. The U.S. got involved, kind of the world got involved. The market didn't really have any major effects. The Jews and the Arabs are at war. We bombed a country, right? The Silicon Valley Bank, regional bank crisis, the office crisis that was supposedly going to just take out all these hedge funds and offices. And there was recently, I just heard this in like a podcast, like a $50 million bank, like the Bank of Zion, just like went bankrupt. Mm-hmm. Like, there's all these like random things. And one could look at it and say, this is building up to like this big pop. But I think there's so much inflation and so many dollars, and a lot of the wealth in the average American is in their house, that the house prices need to chip away slowly to a steady state. And then we'll just ride it back out to like a standard 3% return.
I think I agree with the part where you said there won't be a massive dip, right? There won't be like a crash. I agree with that part. It's hard for me to say that year-over-year prices won't be down year-over-year. But that could mean 1 to 2%, not 15%. I guess that's my base case, is that we will be down year-over-year on a national level, but it will be minimal basis.
The question is how long? Because I would agree with that. Like I think at least through next year, we'll see some decreases. But do you think it's like 5 years of decreases?
I think 3 to 5 years from now, we're probably higher. Median home sale price is higher than it is today.
Yeah, I tend to half agree with you, Dan. I don't think it'll be a huge crash, but I do think, and it's funny because this is where you and me tend to think differently. You always look at a lot of macroeconomic things. I tend to look at more like micro stuff. And I think that the supply and demand issue will continue to exist in the housing market on the demand side, right? Because on average, there is a huge affordability issue. There has been inflation across every part of life right now. Groceries, general living, everything else. And so what we will see happen is fewer and fewer people will have interest or the ability to buy houses, right? Fewer people will sell houses because that will mean that they have to move down in lifestyle because they can't afford a house that's equal to or better. And so we will end up in the people that need to sell their houses will slowly add them onto the market, but the buyer pool will remain super, super small. And I think that's what will drive prices down slowly, but we won't see a big crash because there won't be any like emergency exodus of homeowners or any of those.
Yeah. So basically that extra equity that everybody thinks they have, that extra wealth has to be eaten away.
Correct.
That's the inflation dollars I think just have to get out of the system, right? I don't know how it goes out. The demand issues, actually, I think there's probably a separate hot take for next time in there, like the affordability issue. We'll save that for later.
You don't think there's an affordability crisis?
Oh, I'm not saying that. I'm just saying I think this could be a fun conversation.
Yeah, for sure. Yeah, we'll save that for the next hot take. Cool. I have a good one, Dan. That's a good one for you because I know that the way you think about stuff too, that tracks very well.
Good. I'm glad I listened to instructions.
Yeah.
Also, your cat's making weird noises in the background.
Yeah, it's my cat Max. He's out there just meowing.
It kind of sounds like a cat, like going, wow.
So that's what they sound like when they're 1 month old, dude.
Yeah, exactly.
I know. Sorry. It's just he does that. All right. Everybody, second one?
Yep.
Okay. I think that if you own a property that is heavily distressed, right? And you are doing so willingly, right? So it's not like you can't afford to fix it up, but you're basically a slumlord. They'd be commercial property, residential, whatever. You should be forced to sell that property. You should not be allowed to maintain it because it has a negative impact on the neighborhood, on the real estate market. Let me rephrase it. If you're a non-owner occupant that has a distressed property, you should be forced to sell it. Okay. If you live there and you're poor and it's your shelter, that's different.
Are we in an HOA in this environment or no?
I don't care.
Regardless of HOA, I would say.
Yeah, I see it regardless.
Okay, so Dylan, let me ask you this in your market then, if it's okay to ask. Do you guys have in Cincinnati like city ordinances on certain things around housing?
Yes.
Okay. What do you have? What's an ordinance?
The biggest things I see and are code violations for let's say litter or overgrown grass, or if there's plywood over the windows. Like you will get fined, I guess is the best word for that. So I guess that is their way of enforcement. Now, there has been apartments lately that actually from the syndication crowd that Mike was going that are in receivership now that are being forcefully sold.
Right.
So I don't know if that falls in the same line, but if you're just talking like single family house, not occupied, this gets in the whole like property rights thing. And
it does
pretty libertarian. And so I'm like, it's kind of like you can do what you want with something that you bought. It's just like the greater good thing where the whole neighborhood is suffering because you just refuse to do something about it.
Correct. And so that's why I specify it from non-owner occupants, okay? Because every market has these swatches of properties, right? Tons of them.
Scourges on society.
Yes, they're just scourges on society. They're drug houses. They're owned by some guy that's worth $100 million. Doesn't give a shit. He gets fined. He pays it. Maybe he doesn't. He doesn't care, right? And that exists everywhere. And that also exists on the commercial realm. You know, we drive, I'm sure Cincinnati has areas like this. You drive all around key parts of Spokane and you're like, wow, there's restaurant, business, whatever. And then right in the middle is an abandoned brick building for some reason. And then you look it up and it's owned by some rich fuck who has a house in Arizona who hasn't been here in 20 years.
Yep.
Why is he still allowed to own that property? Make him sell it to somebody that wants to develop it.
So this is like the eminent domain for government. That's kind of different. But would you forcefully basically take it? Or would you say, hey, we're going to buy you out and here's 50% of the value?
I think you buy it out. You can't forcefully take it, right? They have some equity in there. I think you give them an option, right? Because it can also get crooked real quick, right? Whether it goes to like an auction, whether you offer them tax assessed value, whatever that is, that's fine. I think that there should be the option for somebody to buy it and you should force them to sell it to that person if somebody wants to buy it.
Like an auction type thing.
Exactly.
Almost. Yeah.
Here's my opinion on this because I literally had this conversation last night and I've been beating this drum for a long time. Oh yeah, dude. So here's what I think. I think in a city in particular, this has been I've laid this plan out. I'm running for city council, is that if you own a property, whether it's owner-occ or not, you should, if it's on a main arterial in the city or within a corridor, you could set up certain like yellow lines and, whatever. And,
red lines like they do in some places.
No, like freaking road lines. Like if it's like a double yellow, right? Like it's a main arterial or whatever, you should have to meet and uphold a specific standard. Your house should not be allowed to have chipped paint because it's bad for the environment, first of all, because there's lead in that paint, gets in the ground, gets in the soil, gets into the groundwater because a lot of our water, Spokane, comes from an aquifer. So I think it should have to be like completely maintained. Everything needs to meet a certain code and it's going to have to be subjective because if your house is fucking ugly and the community sees it, right? Like the community as a whole, to your libertarian point, Dylan, I think libertarianism only works if you live in Alaska or if you live in a community where everybody is they're just saying, we don't need the government to regulate us because we'll regulate ourselves. And in a common community, you live there because you have common values. If you don't have common values, leave. You know what I mean? And so I think that there should be an assessment. I don't think they should force them to sell it. I haven't really thought about that. I don't hate it, but I think you should get fined. And I think your property, if it is a commercial property or like a landlord, like a residential, it should be condemned. You should not be allowed to lease it in the event that it doesn't meet the codes.
Yeah. But if you can't lease it, they already half these people don't have their properties leased. Look at half of like the Douglas's properties, dude.
Yeah. And then, yeah, in that case, I like the idea of forcing them to sell it because we have a lot of commercial properties of people that live here or don't live here that just sit vacant because they're land banking. And I think that's the thing about it is this concept of land banking. If there is a building or structure on it, it should probably be illegal.
Even if there's not, 'cause like there's so many of these little lots. Like there's that one that's on Wellesley and Ash. Sorry, super Spokane specific for people. But there is like houses all around it. And there is this one lot that's right on the corner that is just a gravel parking lot.
Yeah. Well, parking lot should be allowed, right?
No, it's not. It's not even a parking lot. Sorry, it's just a gravel lot.
Oh, yeah.
There's nothing there. That is owned by one of the multi-nine-figure families that has just been owning that and land banking it for like 40 years, like a long time. I'm like, what the fuck? Like we could put 5 houses there. Like honestly.
We could put a crumble cookie there.
Anything. And it would be better than having this empty lot that just sits there and does nothing, right? But that's even like the worst culprit because it doesn't cause any negative effects. When it comes to like the bad residential and commercial properties, that gives way to like drug housing, to squatters, and negative impacts on the neighborhood, property values. Everything about that is a negative, and it's just a super selfish thing for people to do.
It's the broken window theory, and I do agree. I think if you are a non-owner occupied home, they should take you almost to jail, but for allowing that to happen. Like that's how extreme it should be because it's so disgusting.
So you're just saying increase the penalties and regulations around it.
So extreme.
Absolutely.
But then say if they don't do anything within, pick arbitrary number, 5, 6, 7 notices, then you're like, okay, we're going to take it to auction, and like whoever the highest bidder is wins.
Yeah, exactly.
Totally.
And I would be okay with that as long as the government isn't being the new owner.
Yeah. I mean, I think there needs to be an independent owner that buys it. Because like the thing is too, a lot of these people, I guarantee you that there's the land banking piece, the wealth piece of it. A lot of it too is just inaction. Like they just get their property bill once a year. They don't care, like their taxes. I'm like, oh yeah, I own that piece of shit. I'm rich. I don't need to sell it because it's also going to be a headache if I do. It's going to be on the market for 9 months. But if they were to say like, hey, look, someone's going to buy this from me for tax assessed, and all of a sudden they got a $400,000 check in the mail, even though the thing's worth $2 million, but they were doing shit with it when it's fixed up, and they're now getting $400,000, and they just like a surprise. I really don't think they would care. If they're in such a situation that they have abandoned that property.
Yeah. I like Dan's point of like, you could do something with like zoning maps, of like, these are the properties that would particularly be affected.
And I think the Washingtonian in me comes out is I think that there's some level of like, there should be a community fund. If you're a little old lady living at home alone and you can't maintain your yard, that they should be able to apply for grants to help their house meet the codes for like the owner occupied types, but not for the landlords. I'm serious. Like you probably just put them in jail.
Man, that's almost like a liberal take you have there, Dan. You're going to provide subsidies for people? That's crazy.
I do. Hey, dude, I'm very much so a nice person like that.
We actually have a vote where I live in a little suburb of Cincinnati where they are trying to reduce property taxes and increase our sales tax to account for some of like the new school levies and stuff. And their pitch is, hey, we're not going to increase your property taxes so the lady on Social Security can still stay in her house.
Yeah.
But
depending on where you're at, I personally support that. But also, too, I'm not a rich person that needs to, I don't know, like hoard all my money because I'll know I'll go make more. All right, let's hear it, Dylan.
I don't know where this will find line with everything, but my second one is if you are a traditional finance investor, like a financial planner, and you're still telling your clients that you should be in a 60-40 portfolio allocation for the next 10 years or 20 years, you should be fired. Because I don't think the allocation is going to set anybody up for success.
What's your definition of success?
Beating inflation expectations, I guess, like M2 money supply growth, which is like 7%. Mm-hmm. And this is kind of a fact-based thing. If you look at recent things by Goldman Sachs, JP Morgan, GMO, which is Jeffrey Gundlach, he's a billionaire, they put out these decade forecasts, right? And because of where evaluations are currently at, and pretty much in all asset classes, but especially US stocks, their return projections over the next 10 years are 0.3 to 0.7%.
Wow.
And that's just because they're not saying they're good companies, but they're saying their valuations are so high that this is where they should be 10 years from now, even with earnings growth, even with inflation expectations. And the bond piece that if we are in a period of inflation denominated growth, right, then to hold fixed income, to hold 30-year treasuries, 20-year treasuries. This doesn't make sense. You're buying inflation dollars. So I think if you are a certified financial planner, you should look into other avenues to make your clients money outside of whatever your person ahead of you says that they should be invested in.
So what do you think they should be instructing people? You're not an investment counselor, whatever, a wealth advisor.
Yeah, I'm not any kind of financial planner of any kinds, but international stocks is another place to go. There's plenty of funds out there to do that. Small to mid cap international stocks. You can even buy equal weighted S&P fund. So it's not market cap weighted, it's equal cap weighted. So all 500 companies are the same 1/500th of each company. And then the GMOs, the Goldman Sachs, actually have ranges of doing, there's some variations of this, 40% stocks, 20% bonds, up to 40% gold and other hard assets. And so this is like the debasement trade that's kind of going around social media right now, which is hard assets. And that's not necessarily things that are popular. That's not things that a lot of financial planners get paid to recommend because it's not their own products.
Yeah.
But they're not, again, it's kind of like the incentives piece of this.
For sure. I think that is what makes it so tricky, right? Is the incentives, is because they'll also get commissions that are based off of different things that they put people's money into. I'm trying to think of where I saw this. I'll see if I can find it. But there was maybe it was that video that one of you guys sent over. Basically, it was looking at diversified investments versus singular investments and how basically anytime you have a diversified portfolio, on average, you'll barely heal with inflation, if at all.
Yeah.
Yeah. Diversification, the idea is it sucks.
Yeah, it sucks completely. And really what you need to be doing is just find like the top sort of companies, the Fab Five or whatever we call them now. They keep changing it. And just put all your money in those because that will drive 80% of the growth of the entire market. Right. But if you're trying to distribute across these different ETFs that are in different industries or put it into bonds, things like that, ultimately you will end up further behind than even if you compared to inflation, you'll barely be keeping up with inflation at all.
Honestly, this changes if you are a 65-year-old person that's reaching retirement.
Of course.
Right. And but if you're in your 20s or 30s and that's the pitch that your financial advisor is telling you, I think that is terrible advice.
Yeah, for sure. But I think it's a good take. I would say on top of that, if you are someone in your 20s or 30s and you are taking explicit advice from a financial advisor that is just planning on parking money and you're not already rich, you probably shouldn't be doing that in general. You should be swinging for the fences or you should be investing in yourself because your return is going to be significantly higher doing that than just putting it into.
I have friends that sometimes ask me they know I have some money and they're like, well, don't, what are you doing? And it's different because I have my own business that generates lots of cash, right? But they have financial planners that take 1.5% AUM or they're in these high expense ratio stocks. I'm like, just don't do that.
Yeah.
You're shooting yourself in the foot, right? Just go buy VOO or something in the Vanguard Index Fund. So
what do you guys think about this? I've heard it a couple of times. I can't remember who said it recently. It was on Instagram, so it's fact. That's where I get all my news and all my research already, all my op-ed.
Is that your hot take?
Yeah, that's my hot take. Instagram's the shit. No. So I've heard it a couple of times by reputable people that, the S&P 500 is really, if you invest in that, you're really just keeping up with inflation.
Yeah. Mm-hmm. I mean, look at M2 money supply over 120 years. It's 6 to 7%. And that's basically what the stock market does.
Mm-hmm. Right. And so it's do you really want to be wholeheartedly investing all your money in that? How do you look at it and say, well, I generated all this wealth? It's well, yeah, dude, it's because inflation, every dollar is worth this much less. So now you have $4 million.
Yeah. Well, here's also, if you think about that as well, it's actually less than inflation because it should appreciate 7%, the matched inflation. When you sell it, you get to pay taxes on that with a gain.
Yep.
Now you're coming in even less.
There you go. Exactly. So that's my concern. I'm going to ask you this, Dylan, so should we invest in Bitcoin?
I mean, my answer to that is yes.
Does that same concept apply? Because it's almost like if the capital inflows keep going there, Bitcoin's going to keep going up.
Yes. I mean, my answer is a resounding yes. Obviously not financial advice, but it is the hardest asset that the world has ever seen. And if you even go back to gold, right? As soon as it came off the gold standard, you go back to 2000, most people wouldn't know this, but gold has beat the S&P 500 and the NASDAQ over the past 20 years in terms of returns. You are better off owning a pet gold rock that does nothing versus companies that produce cash flow and innovate as far as financial returns for the past 20 years. And that's just a symptom of broken money to me.
Is it quite possible that a bunch of people in the world could get together and say, let's go buy some Bitcoin, and then let's announce that we're going to have strategic Bitcoin reserves in all these Western countries? And then all of a sudden they're rich, and then they...
Yes, but then why would you be a fool not to own it?
And then they sell it so that they can make some money.
No, because then my comparison to that is...
Are they manipulating the currency?
To me, Bitcoin is better money. So would you go and trade Argentina pesos for dollars.
No.
So to me, you wouldn't trade Bitcoin for US dollars because that's the same trade, same type of trade.
Well, I just don't have any Argentina pesos. So I don't.
I'm just saying you're trading better money for worse money.
Oh, like I wouldn't go and take my dollars and get Argentinian pesos as an investment. Like I would not invest in that currency.
Yeah, doing Forex, yeah.
When I put money in my bank account, I guess I'm essentially investing in the dollar.
Yeah.
Correct? Right?
That's an interesting take right there. When you're putting cash in your bank account, you're investing in USD. Man.
I mean, you think about it, you really are,
Yeah.
right?
I mean, this could dive deeper to like the financial nihilism that everyone's like, hey, I can't get ahead. Why save? All this kind of stuff. And their only options is to keep up with inflation at 7%. You need better options than that.
Right.
And unfortunately, those better options aren't what's popular.
I guess not directly aligned with your hot take, but I guess add what I think, because I'm pretty much going to align with you, is I think you can't invest. Like if you're 20 years old, 60 years old, you can't just be investing in the broad stock market indexes and make any real gain towards wealth unless you have a high paying job and you spend way less than you make, or high paying income, you spend vastly less than you make. Then you can stack dollars and wealth. I think you do need to invest probably at some level in like a Bitcoin opportunity, real estate, if it's the time of the market for you to get a well below market value asset, individual stocks or something. You got to get good at something. I would not just go tell people to go buy Netflix or go buy the best performing stock, because that has no indication that it's going to go up.
There's been 40 years of declining interest rates, and declining interest rates help both bonds and stocks. We hit that lower bound, that zero bound in 2020, 2021. So if that trend is reversing on another 40-year cycle, the same playbook doesn't apply. I'm sorry.
Right.
Like it just doesn't.
Yeah, it doesn't apply. Fascinating.
Cool. I think it's a good one, Dylan, especially from your perspective, because I know you always look at the larger investment markets. That's a unique one.
Yes.
Cool. Good stuff. All right. Last one, Dan.
Last one. This will be easy. Wholesaling is on its last leg as we know it.
Okay.
Real estate wholesaling is on its last leg as we know it.
Are you going through the regulation piece on this?
Well, piece of it's the regulation. The regulation isn't the reason. I say it's not the cause. So we have regulation for a reason. And I do think regulation is coming in because what we have is dipshits out there that have done dipshit, unscrupulous things to people, right? So I have this belief that most people in these days know what a cash home buyer is. When we first started wholesaling, you almost could be like, what are you doing? Like, you're just going to buy my house for cash? You have cash? You have that much cash? Right? People would just assume that, right? They didn't know what's going on. And so now they know what it is. They've been marketed to on every medium. And then you have people like we have local guys here in town that do scummy stuff. I mean, Mike knows them. I don't know if you want to name drop anybody, but they do scummy things.
They're kind of sleazy home buyers.
They're sleazy, right? And they do sleazy things, and the word's getting out, right? And it's not only getting out to people in the real estate industry, but it's getting out to consumers, because there's enough of them now that they see this person on the billboard and they're like, yeah, that guy ripped me off. Or I went and talked to this accountant later and they're like, what did you do? You know what I mean? And so they're not that people are that way. Like I feel like Mike and I never did that. I know you don't do that, Dylan. I know there's a lot of great operators. And so the reason why I say it's on its last leg is because there are, as we know, there are good operators like this. The onesie twosies are going to disappear in this market. This market's not going to sustain them. The guys that stick around and do good are going to have to operate in regulation because of the dirtbags. I think part of the lift now is to get into the industry, the hurdle's higher. It's no longer a no money industry because of the sophistication of the data, the mail, the mass mailing, the mass marketing, and the leg up in finances you need to have to be able to do that is going to be kind of being kept by the people like you, Dylan, in Cincinnati, the people that have a well-established good business. However, you're going to have to be able to operate in regulations, and that's going to mean you're going to have to be able to do double closes. You're going to have to vertically integrate your business to be able to have cash reserves and be able to have high quality lenders to do the business. And I think because of the next 5 years of like real estate market conditions, most of the money is going to be made in the wholesale flipping strategy. And I purposely left off Novation because I think that's going to get canked as well.
I hope it does.
Because there's too many people doing fucking weird shit. And it's technically a net listing, which is illegal in most states, right? They're just getting around it. I do think the high quality people will stay around. They're not going to be home buyers like they are now, but you're going to end up doing more wholesales and more flips to keep profits going.
I don't know if it's a hot take, because I agree with pretty much everything you just said.
I think that we would all agree with Dan, but I would say that there would probably be a large portion of the population that would strongly disagree with you. If you go and like find any of like the Pace Morby, the Jameel crowd, like the people that are like, oh, well, there will always be a way for people to do it. Like, what we're going to do is we're going to buy it in a trust, and then we're going to sell the trust to the buyer for a fee. Like, these dumb shit.
Yeah.
They're probably right. But I think that, to your point, Dan, that will also get shut down too. And I think that whatever workaround people find, just like it's taken them so long to start cracking down on wholesaling, every new workaround will get shut down faster and faster and faster and faster until you're basically stuck being a wholesale flipping shop, or you're required to be licensed to do it correctly.
They're on to you.
I think some of these will come back to, like, like, for example, let's say you wholesaled some old lady's place and you made $100,000 on it, which I've never done, but let's say that happened. And then now the kid finds out like 2 months later, like, you did what? Like, and then he's going to be like, let's say he's wealthy or they're wealthy, the family, they're going to try to go after the wholesaler, right? For being in it. I think you're going to see some of those pop up as time goes on.
Oh, yeah. Yeah. Well, I'm sure those are already happening. We just don't necessarily hear about them.
I agree.
Right.
Yeah, I agree. Yeah.
So why is a great hot take for the audience, Dan? I do agree with you fundamentally, but like I said, I think that there will be a lot of people that would disagree.
You guys are just saying this because you just shut down your backyard home buyer's business.
Right, exactly. But I really have thought about this a lot lately, and I don't think it's like we have a lot of folks in the scale community that I would say are smaller operators. I don't think those are the ones going away. I think they're good. They have been operating and they've figured out how to operate in this industry. I just think there's so many people, the way we all grew up in the industry where there's a lot of food for everybody. It's not going to be that way anymore. And you have to be an exceptional operator. And you have to be able to operate within regulations, which is how a good business operates. If you can operate within regulations, you're doing all right.
Yeah. I think the first ones to go down will be the mid-sized companies, not like the ones that are doing 5-10 million a year, which do exist in some of these larger states, right? But the ones that are doing like 1 to 3 million, and in order to be profitable, because they have a big overhead, they have a ton of waste, they're having to do the shady tactics. They're having to price shop sellers. They're having to manipulate newbie buyers to overpay for things. They're having to beat up their contractors and title agents and everything to squeeze as much as they can out of all the deals by cutting their own fees, right? Those are the people that will go away very, very quickly. And I would imagine there's probably even quite a few of those that have already started to disappear because of those things going sideways. You
know what? If you're a prosecutor that does that, you should just reach out to all the local title companies and say, hey, who do you no longer work for?
Oh, absolutely.
That's like the honeypot right there.
Totally, dude. Yeah. All right, cool. Well, guys, let me know what you thought about that. I thought that was a fun episode. DM me on Instagram, Mike_invests. Let me know if you liked it, didn't like it. Also, let me know your own hot takes. If you have a good one, I won't name you, but I'll share it on here. And maybe we can banter about that too. We love some good controversial topics. But anyways, guys, thanks for listening. We'll talk to you guys next week.
See ya.
Thanks for listening, everyone. If you want more from us, you can shoot us a follow on Instagram. I am at Mike_invest. Dan is at InvestorMan Dan. And Dylan is at Dylan_does_deals. Shoot us a follow and send us a DM to let us know what you think of the show.